Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is February 27th, 2018. I thought I'd take a look at RBOB tonight. The ETF is UGA. Got a mixed bag here on the trends. Short down. The other short or intermediate and long term are pointed to the higher side, so we do have a mixed bag here. We've got the technicals, which are still strong, and we got the seasonals, which are somewhat weak, and you'll see this in a second why it's important but not super important. We have nothing really happening in any of the overbought conditions, but when it comes to the pro alerts, we actually had a high that triggered in the flow, and this is a profit taking. So easiest thing to do is just take a look at the market here, and you'll get a feel for what's taking place here. So here's the trend to the upside. You know, obviously there's a daily bars. We had the market came down, it found nice support, and then it broke through, and then is retracing just a little bit and touching from the upper to the lower side to the 50-day moving average. This coincides with a 42. There's a couple breaks in here because of holidays, but this is actually one continuous resistance support level, and we're basically at that level right now. So let me just pull the cursor all the way across there, and you'll see that with yesterday's high and today's high, that we are basically butting up against it. So this level right here, which is it's RBOB, so it's 2.0077 going to 4 decimals. That's the level that is acting as resistance. So it's basically been batting on the high side at this level and the lows at the 50-day moving average. So where do things kind of stand right now? The best way to kind of view this is to go to the website, and what I thought I would do is I would take a look at the seasonal tendencies, and here's the point. Here's the 5-year. There's kind of a mixed bag here as to what's really going to be shown here, but I just want to point out, at least on the 5-year, that the thrust that has taken place is pretty much done. So it's going to be kind of choppy, so expect a lot of tradable opportunities, and the quote-unquote easy money, this easy money right through here, is done, at least for a period of time. If we take a look at the 10 years, you'll see that we're at this peak right here, little sell-off, and that's why that seasonal was pointed down, even though the seasonal trend is to the upside. A little more crystal clear here with the 15-year, and with the 20-year, you're seeing the same thing, just a little bit smoother the longer you go out. So the trend from the seasonal perspective is still higher, but when you really look at the short term, quote unquote, the easy money has been made, and I think that if we look at the 5 years, just expect kind of a choppy period, but with the 10, 15, and 20 years, choppy period with the trend to the upside is probably the best way I can express this. The other thing I want to show to you is the seasonal depth. Seasonal depth basically looks at the 5, the 10, the 15, and the 20 years, looks at the correlations over time, back related to the individual market, and what you're looking for is there consistency over time for the market against its 4 time frames, against the 5, the 10, the 15, and 20 year. If you take an average of those accuracies, if you will, you'll see that RBOB is the number 3 market from the top. So it's a highly accurate market. So hogs and S&P and the RBOB, and you can see a list here. All you'd need to do is just come down to charts, come to seasonal. Not the easiest thing. You actually had to scroll down just a little bit to actually come to this, so sometimes it's hidden, but you come to the seasonal depth. Anytime you have a market that's in the upper level of the seasonal depth, that's a market that you want to be closely monitoring when you're actually looking at the seasonal tendencies. So again, what you're going to see, because there's more and less data, the 5 years having less data, the 20-year obviously having more data to it, you're just going to see a trend to the upside with the 20 years and a choppy period with the 5 years. And so I guess my point is that this flow high that occurred, I'll just pull this up. If we pull it up here, here's the actual signal that popped up. This is the flow high. And I'll spend a little bit of time here. This red dot, the stretch high, that's generally an indication that whatever has taken place is to the upside is pretty much done, and that we expect some type of reversal, to which we did have. Then you start getting some signals that are saying, look for a bottom, look for a bottom, look for a bottom. And that's what some of these other conditions are. This is this one right through here. That's called a pop bottom. You'll see it listed on there as a pop low. And when we got that signal, the market did in fact find its support to the market and started to rally. This little crosshair right through here, that's what we call a keel low. And anytime you get a keel low or a keel high, anything that has a major crosshairs and it's somewhat shaded, what that means is that there's change in the environment. It's more of an environmental change, and what you expect is for the market to stop its trendiness. It's still going to have some surges to it, some tradable opportunities, but you would expect the market to go into a different phase, if you will. That's what the keel is. So as the market started to head higher, today's action, that's where that profit taking came from. So you can see the surge that has taken place. I shouldn't say surge because we have a surge indicator, but you can see the rally to the upside. Well, a lot of that has taken place, as I shown, in the seasonal tendencies. A lot of that has taken place as far as what I'm terming as the easy money, and that indication right there, that flow high, is telling us that there's an opportunity to take some money off the table. However many positions you might be trading, you might want to play a little bit safe. It's nothing more than profit taking. We wouldn't necessarily expect the market to sell off dramatically because we're really not in strong oversold territory. But again, and this is why I'm pointing this out, if we come back to the website, that the quote-unquote easy money has been made, just expect that choppiness. As I'm mentioning, the trend would still be the upside with all of the other time frames. But the fact is that flow high is telling us that a lot of the quote-unquote easy money has been made, and it's not a bad time to take some profits. When it comes to our systems, I have systems for the RBOB. I just don't put them up onto the website because I'm constrained by memory issues and I have to be selective with the markets. So I'll just simply quote crude oil, obviously a close cousin to it, and that is right now flat. We have a long system and we have a short system. They're hedged, and so we're basically zero contracts, but we have a hedging going on between the two different time frames and two different systems in crude. So essentially, it's kind of following suit with what I'm talking about here with RBOB, where we've taken some profits and we're just sort of cool just to stay on the sideline until the market figures out what it really wants to do. So that being the case, if you're trading RBOB, just expect some choppiness and basically just look for opportunities to unwind some of the major positions that you might have just to take a little bit of profit, because there's probably going to be I wouldn't say difficult trading environment, but not as easy as it has been, given that that little surge that we've been having here over the course of the last maybe 10 trading days or so. So that will at least give you an indication as to what's taken place. I'm working on some presentations. I'm going to be doing a lot more with a new website. I'm hoping to have that new website up and running by this weekend, and then I'll start talking a little bit more about it so that we can go into a little more detail when it comes to some of the indicators and be able to go into how you can gain access to some of these different types of indicators so that you can apply it to different time frames and to any market that you might be looking for. So you have, I guess, a greater ability to react to these conditions, and you're not waiting for me at the end of the day to actually show you what's taking place, that you'll actually have them live should you want. And obviously there's going to be a purchase to it, but still nonetheless have access to all of these and even a few more indicators. And the plan is to do a workshop on the surge, the flow, and the doubt profit taking here, and then eventually we'll do a market reversal and some environmentals and just kind of show how you can incorporate that into your day-to-day trading. So that's where we stand for right now. We'll take a look at another market here shortly, and if you do have questions, you can always email me. Just come to the website, just come down to our contacts, and you can pull me up that way. The other thing you can always do is link with me on LinkedIn. That would just simply be, just go to LinkedIn and just type in my name, David Stendhal. You'll come to the site and you get a feel for some of the posts that I put out there, and then a little bit of my history with some of the markets, or excuse me, some of the firms that I've worked with, most of which are CTAs, where I was portfolio manager trying to trade specifically the futures markets with a couple of different firms. So that will at least give you an idea, and we'll take a look at another market tomorrow. Thanks very much.